Good morning, it's Wednesday the 5th of April. This is the Phoenix Blue Update brought to you this morning by Tom Colley. Yesterday, very much a quiet day in the markets. It looks like we're going to be pretty quiet again today, potentially. There's not been any news particularly to move the markets. The data that has come out has been very much in line with forecast. I think potentially the markets are waiting for non-farm payroll on Friday. We're at the beginning of the month, the beginning of a quarter, so a lot was closed out the back end of last week. And there just hasn't been anything to excite the markets. The only thing I saw of interest yesterday was Bloomberg reporting that Donald Trump is still working on his healthcare bill. An amended version of it, and they suggested that there might even be possibility of him pushing something through this week. So that's clearly something to look out for. When he had to pull back from the previous bill, that caused a weakness in the dollar, a reduction or in the confidence in Trump's ability to get his plans through the legislature. So one to watch there, but again, only reported on Bloomberg, no certainty in that, but it could just reignite a bit of dollar strength this week if that was to happen. Over to news events themselves yesterday, well, there we are, there's one of them. Construction PMI on the pound came in bang on forecast. We had Governor Lowe speaking about the rate hold and rate statement for the Reserve Bank of Australia. Again, to be fair, the markets did sell off. Aussie and Kiwi were two markets that did sell off quite strongly. We saw very little in the euro, the yen, etc. But the move was started by the rate statement, and he didn't say anything in his speech that really contradicted what had been said there, so the move did carry on after that. We had the Canadian trade balance out on minus 1% against a forecast of 0.7. Mario Draghi, I mentioned yesterday, was speaking at the launch of the new €50 note, and as I suspected, all he talked about was the €50 note. There was nothing in there for us at all. Then we had the New Zealand Dairy Price Index, which we don't have a forecast on this. We only have 1 week to another, but as you can see, those figures are very, very close. If you look back historically, 0.1 is not a move on that. So again, that in itself didn't generate much interest from the market. Going forward to today, we've got services PMI on the pound. Again, this is one that, to be fair, that the forecast is very much in line with the previous. This one could be quite interesting today, although in all honesty, the volatility in the pound and the uncertainty is a market that on the whole we're avoiding at this moment in time. Then we have the ADP non-farm employment change. This isn't the full non-farm we're waiting for on Friday. But last month we had a really, really big figure on this, and it built a lot of expectation, or the market's priced in decent figures from non-farm itself, so that when the actual day came, that didn't move it a lot, and that was also pre the very much anticipated rate hike from the Fed. And then also this afternoon, non-manufacturing, crude oil inventories out of the States, and then the FOMC meeting minutes due out this evening, 7 p.m. UK time. On this occasion, the markets aren't expecting there to be anything in particularly different from what's already known and been said. There's been a lot of speakers from the Fed out since the rate hike. So we believe the sentiment, or they've related to their message to the market, and the market has already reacted to that. However, you never know with these things. There just could be something in there that the market takes an interest in. But as I said, I think eyes are somewhat focused on non-farm on Friday at the moment. So over to the charts themselves. Very, very much we are just simply holding time, ranging, very, very little movement there in the dollar index yesterday. Again, we did have a look down on the yen. To be fair, we had an order in at about 110.15 through here, an intraday order that didn't trigger. Unfortunately, that would have given us an intraday target there, but price just didn't come down and meet these previous lows on this level, which is already also support and resistance over to the left there. Over on the euro, well, we've seen the dollar index chart again, very much a range bound day, and has been so now for the previous 3 days. Our interest here would lie now in a pullback. I've got an order in here at about 107.80. I will intraday be looking for a break of 107 with a potential pullback to take a trade against my bias into my trade entry, or maybe not quite as far as that. So that's been an intraday BPR trade from around 107, an opportunity for us there. I mentioned the Aussie. We had, particularly early in the day yesterday, we had a good downside to the Aussie. I've a resting order waiting here, about 76.20, is it, or is it 75.20? Yeah, 75.20, to take this market back up to these highs up here. However, there's a nice support level through there. That I've got another order in there, an intraday order, and I'm looking for price to pull back before it comes down into that long-term trade. So what I'm doing again there is, yes, I'm committed to a long-term trade here, but what I'm saying is my analysis is suggesting that the market is going to come down here. So if I have an opportunity, why not trade, particularly when we've got very quiet markets, why not trade from a high probability level down to a level that we are admitting by placing an order that we expect price to get there. So logic says let's take the opportunity and trade down to that level. So that's exactly what I'm looking to do on the Aussie there. Now on the Kiwi, again, I'm waiting for a, sorry, I'm mistaken there. This is an intraday order on the Kiwi. There's a very nice level through there that you can see there on the daily. It's also extremely nice on a 1 hour chart. I'm looking for price to come into there and look for a reaction to the long side. I'm not necessarily looking for it to take out of this downward trend line at this stage. The reason being is because I think there's also very much a channel forming there, and I'd be looking for a longer term opportunity to the long side on a break of either the trend line or the top of the channel, really one and the same thing, pull back and then take that trade to the long side. So with this, I'm really just trading intraday. I'm trading a nice high probability level, and just looking to take 20, 30, 40 pips out of a trade in a short period of time. If the trade triggers, it will be closed before the end of the day, as you should really do, or certainly secure profits, move stop losses to break even, things like that on intraday trades. They are intraday trades because they should in principle be opened and closed within that particular day. Other markets we took an interest in yesterday. We got short gold intraday from this 1260 level. We had been seeing 1250 as a very key level, but clearly 1260 also important. I've also got in a box range marked between 1240 and 1260. So that for me is really an intraday trade, because I'm not convinced price will get below 1240 easily. Yes, I could have traded this high test bar here as an end of day trade with a sell stop below and my stop above. but that would give me very little more than a 1-to-1 trade, so I wouldn't want to be taking a risk on that basis. However, intraday, getting with 20 pips, something like that, you could have for 4 or 5-to-1 by the time you get to the bottom of the box range. What happens from there? You've made your money, you've got the opportunity of another trade to the downside if it breaks back and retests that box range. If not, there's a nice trade there, but as I say, there isn't enough profit in that for me to take as an end of day trade. One other trade that I've mentioned the back end of last week, oh no, sorry, it wasn't, it was Monday. Yes, Monday it was. This is platinum. Just to show you that when markets are quiet, we still trade and we still have opportunities in other markets, commodities particularly. We had a nice low test bar on the down to the bottom of what are 2 box ranges, a box range within a box range, a stop above that low test bar, sorry, a buy stop above that, I'll stop below it. This trade is now in profit. We've had money off the table, our stops at break even, and we're targeting the top of the smaller box range here, that when we finished is possibly a 4-to-1 trade in terms of win on that. So that trade's doing very nicely, and it just shows you that if rather than trying to force trades in FX markets when they're not there to be had, by having access to and knowing how to trade other markets, commodities particularly, there are opportunities there which are high probability, so you're not increasing your risk, but you're still taking having the opportunity to take trades and leaving markets that you really shouldn't trade, leaving them alone. Okay guys, now if you want to know more about these the way that we trade those, the way we look at commodities, commitment to traders, all the things that you see us talk about on here. Tuesday the 18th of April is our next free trading event in London. If you're interested in that, you can register by going to eventbrite.co.uk or contact us through phoenixblue.co.uk, our website, and we can send you joining instructions, etc, etc. Live trading alongside Phoenix Blue fund managers, but also a lot more general information and the opportunity to talk to your people who in similar position to you, who've come to Phoenix Blue, taken on board the methods that we use and moved their trading on to the next level. Okay, so that's it for today. As I said, anticipating another relatively quiet day, and we'll speak to you in the morning with an update, but eyes really forward to non-farm payroll on Friday. Thank you and goodbye.